Hello, thanks for coming here and doing the interview.
You're welcome.
I know you've been quite busy over the last couple of weeks. Before we begin, I wonder if you could just tell me a little bit about yourself.
So, my name is Goode Wyche Jr., married, 8 kids, 4 grandkids. Kids are all out of the house, graduated military, grad school.
Yep.
I've been serving in the military for 37 years, 20 years reserves, 17 years active duty. So during my reserve time, I've had a couple of companies that I've had. Information technology was back in 2006 to 2010 while in the reserves. So that ended in 2010. Also have a couple of businesses right now that I'm doing, gearing up, preparing for retirement because my stint in the military is coming to an end. So I need to do something other than work for someone else for the rest of my life. So those are the ventures.
Okay.
Where I'm jumping into.
Very good. Okay. Well, good. So we'll jump into your business. I wonder if you could tell me about your current business, the financial one specifically.
Right. So the financial piece business is one business, and it is basically I am I guess a consultant a consultant.
Mm-hmm.
And the name of the company that I consult for is called MWR Financial, which stands for Make Wealth Real. And it's where we help individuals, businesses, people from all walks of life make over their finances, be it, credit or increasing the amount of money that they keep, reducing taxes from the government, from big businesses, banks, and that the savings of that money you reinvest it into something that grows your wealth without risk.
Okay.
In a nutshell.
All right. Well, good.
It's very.
Nice.
It's a very vast. A lot of products available for that business, but it basically helps anybody, no matter where they're at in their financial journey.
That's outstanding. That's good. And how did you come up with the idea for this business?
So I didn't come up with the idea. I was introduced to it through one of my other businesses.
Right.
My main business is I offer services. That's another business. I offer services to the trucking industry.
Okay.
And the group that I belong to, because we're trying to build truckers, operators of trucks, and trying to help them to be efficient in their business.
Mm-hmm.
The financial piece of it was to help them, when they're making all of the money moving products throughout the country, they need to do something with that money. So build their business and then invest it so they're not driving a truck until they're in their 80s.
Yeah.
So they can retire.
Right.
And pass the business on or just sell their equipment, but they have some income coming in when they're done driving the truck. So that's how I fell into the MWR piece.
Okay. Well, good. So speaking of your clients, both on the financial side and the trucking side, what are some tips you would say for building relationships with those clients?
Number one, as a business owner, as a owner-operator of my business, listen to your clients.
Okay.
You have to get an understanding of what they are trying to accomplish in their business, not what you are trying to accomplish for them. So listen to what their needs are, and satisfy their needs.
Okay,
pretty much.
Good. I'm glad you mentioned that. 'Cause we'll get into it later. I think that's one of the issues Atari had later, with not listening to their customers and just churning out game after game after game with no oversight.
Yes.
Good. Speaking of, I know you're a veteran. Was it 30 years?
37 years.
37. So that
years.
being said, for you, what does it mean to be a veteran-owned company? What does that mean to you personally?
Personally,
I
mean, we volunteer. A lot of veterans volunteer to sacrifice, to make the ultimate sacrifice. I don't know if a lot of veterans understand that, but we, for what this country stands for and our values, and our way of life, we put our life on the line to sustain that.
Yep.
Good, bad, or indifferent.
Yeah.
And, to me, it's an honor to do that, to serve my country because I'm
Yeah.
giving back.
Right.
Um,
Okay, good. Without get into too much free financial advice here,
Right.
I know you do it for a living. Do you have any just tips for a layperson as myself with not a whole lot of financial background?
Right.
Kind
Well,
of just scratching the surface here.
So just scratching the surface.
Yeah.
So your main thing is just a lot of folks have from all walks of life. It could be working for McDonald's, at your level, working at a PhD level, you're
Yep.
very educated, and there's folks that are doing well. They own businesses and they're making a lot of money. But the problem that we're seeing is that the person, for instance, if a person's making $80,000 a year, $60,000 a year,
Yep.
and they have no debt, everything's paid off, and their expenses. So if they're making, I don't know, $2,000 a month, and their expenses is, $1,500 a month.
Yep.
So they have a $500 positive cash flow.
Yep.
Coming in. So the person that's making, $10,000 a month,
Yep.
and they have $15,000 in bills per month,
Mhm.
then they have a negative cash flow.
Okay.
So the person that's making less money is actually bringing in more money than the person that's making, $80,000, $90,000
Right.
with the $10,000 a month.
Yeah.
Monthly, income coming in. So what we do is we not attempt, but we show folks how to increase their cash flow with their current job. You don't have to go out and get a second job. Just with what you're making right now, we introduce you to ways to reduce your taxes, increase your credit, reduce your spending, and then by doing that you increase your cash flow.
Okay.
Because if you have a higher credit score, that means the cost of doing business with the banks,
Yep.
loans, you get a better interest rate.
Yep.
Versus if you have a poor credit score, you pay more money. So by having a better credit score, just one section, you save money.
Okay.
Insurance companies, banks,
Yep.
credit cards, whatever. And then by reducing your expenses, and what I mean by expenses, if you have a credit card and you have a high interest rate, that interest rate, the interest that you're paying is compounded, over years, and that's eating up a lot of your cash.
Mm-hmm.
So if you spend all your income paying back interest, so you want to reduce that interest rate by paying those credit cards off. And the seasons, we have Christmas, we have Thanksgiving,
Yeah.
we have Halloween, it's geared towards you spending your
It
money.
is, yeah.
And if you don't have the money to spend,
Mhm.
you're gonna put it on credit.
Yep.
So we want to reduce that, and the money that you save from that, you can take that money and then you can put it in an investment,
Mhm.
to build
Yep.
your assets, because that's what you want to do. You want to build your assets.
Okay.
Yep.
So I think you kind of touched on this already, but what would you say the biggest difference between the financial company that you work for and all the other ones?
Well, we help everybody. You can have poor finances, you can have great finances. There's a spot for everybody.
Yep.
There's something for everybody with our company, and the company that I represent is they're fairly new, but they're on the verge of being a $1 billion company.
Oh, wow.
From the ground floor, which is what I'm in right now, but this company is going to be a household name, in a matter of 5 to 10 years, and it's basically helping people.
Yeah.
And some of the instruments that are available to folks that are, I would say, high six figures and up,
Yep.
are not available to the common person.
Yeah.
This company offers those same products to everybody.
Yeah.
So it levels the playing field,
Yeah.
and allows people to, grow their wealth.
Good. Outstanding. Yeah. I know looking at financial advisors previous, I know some of them cost 60,
Yes.
$100 an hour,
Yes.
and I don't think the average person could probably
No.
afford that.
Nope.
Yeah.
Nope.
Yep.
Yeah. So our company have I mentioned you before that.
Yeah.
I don't look at your finances.
Uh-huh.
I just introduce the information to you.
Yep.
The company that I represent have a team of enrolled IRS agents, financial planners, accountants, CPAs,
Mhm.
and they do all the work.
Wow.
So each individual that joins the program will have access to those individuals to make over their finances.
Wow.
And you get top notch
Yeah.
top notch advice, and at more than 90% less the cost
Yeah.
of what you would normally pay. So
Okay.
these folks individual one-on-one, it's
Yeah.
to the common person that's let's say working at McDonald's.
Yeah.
They can afford a financial
Mm-mm.
planner,
Yeah.
at those rates.
I know the company I work for doesn't personally recommend the stock market or playing around with that. I was wondering if you could just briefly go over the reasons for
Right.
that.
Because it's risky. You
Okay.
have to, I guess the term, you have to, in order to make money, you have to spend money.
Yep.
Yeah, and with the stock market, there's always a risk. They tell you when you go to the Ameritrade and
Mhm.
the Webull and all those type of, investment, you have to put money into it in order to get a profit. And it depends on the market.
Yep.
If the market's up, that company's product is up or whatever, their shares are up, you make money. If it drops, you lose money.
Yep.
So the company that I represent, we do not deal with that type of speculation,
Okay.
because it's too risky.
Okay. That being said, do you think there's some underutilized financial resources or financial resources aren't really being used out there besides the stock market?
Yes.
Okay.
The philosophy that we
Yes.
push is very underutilized. People don't realize that if they can increase the amount of cash or retain the amount of cash from their checks that's coming into their household,
Yes.
things will be a lot better. So
Yeah.
if you can increase your cash flow and build your assets, reduce your debt,
Mhm.
with your current job, you will have more money, to invest.
Yeah.
In the instruments that the company recommends, non-stock market stuff.
Okay.
But yeah, that's the thing. Reducing your debt, reducing your taxes, increasing your assets, increasing your credit, which brings more money into your household.
Right.
So cash flow is king.
Yeah. Would you be able to maybe just provide your opinion on mistakes businesses make? Maybe somebody just out starting their own business. What are some mistakes a lot of folks might make?
Right. There's quite a few.
Yeah.
Not understanding the industry that you're trying to cater to. Training in that field, whatever
Right.
field. For instance, like transportation.
Mhm.
You have to know. In the trucking industry, you have to know what that industry is about and how it works, the ins and out. There's truckers, owner operators. There's brokers. There's shippers, which refers to folks that ship, manufacture, resell product. So
Yep.
that product has to get from point A to the receiver. Point B.
Right.
The guy in the middle is the trucking company that moved that product. So there's a lot of lingo and terminology that you have to understand how that works, how to move that freight. So if you have no training in that industry, you're gonna,
Yep.
you can't jump into an industry off the seat of your pants and expect to be successful. You gotta plan ahead.
Okay.
And then another one is cash flow.
Mhm.
If you don't have cash flow, if you don't have sales, you can't pay your bills.
Yep.
So company fails. Lack of cash flow is probably one of the biggest one of the biggest things that why companies fail.
Yeah. Thank you. Moving on, kind of transitioning here, I've been past probably 5-6 weeks doing a lot of research on early video game history, typically from the 70s through maybe just the early 90s.
Okay.
I was wondering if you, as a financial consultant, could maybe chime in why you think maybe Atari might not have done so well in the early 80s.
Yeah, wow, that was a long time ago.
Oh, yeah, yeah, it was.
Yeah, so I think Atari
Yep.
never modified their existing platform
Right.
on how that game, the dynamics of the game,
Yep.
the background, the graphics, how it looked. They just kept the same
Yep.
platform with different games, but on the same platform.
Yep.
As their competitors probably took feedback from customers, from industries, and they were able to go with the changes.
Yep.
And add better graphics, add better characters, and to try to make it look more, I don't know, more lifelike, I guess.
Yeah, that's good. Yeah.
And then Atari never, they
No.
they never, they didn't grow. They
No.
didn't grow with the customers.
Yeah. If you look at the early arcade games, they weren't too bad.
No.
And Atari tried to make them for the home console.
Yes.
And just the technology wasn't there. I think by the time the 90s came,
Right.
Nintendo was able to jump on the
Yes.
new chip processes
Yes.
that Atari never did.
Nope.
Good. Speaking of that, more on the marketing side, if you can remember back, I know it was a while ago, but I remember Nintendo coming out. If you could maybe chime in why you think they were successful, especially on their marketing and their
Yeah.
branding.
So the big thing behind marketing and branding,
Yes.
marketing, you have to let the world, you have to let everybody know what you're doing.
Yep.
If you don't let people know what you're doing, they're not gonna know about your product,
Right.
and therefore you're not gonna get sales. And
Yeah.
and without sales, you're it's a non-start. So Nintendo was very good at their marketing efforts and branding their product. So
Yep.
everybody, everywhere, every kid knew about Nintendo.
Yep.
And then and the commercials and the stores, so every kid wanted it.
Nintendo stores, magazines,
Yes.
competitions.
Yes.
Yep.
Yes.
Good. I'm not sure. Are you familiar with Blue Ocean versus Red Ocean marketing? No?
No.
Okay. So basically the idea is Blue Ocean seeks to get an untapped market,
Okay.
like push their market to people that never heard of it.
Right.
Whereas
Okay.
Red marketing seeks to exploit the current demand.
Okay. Okay.
Jumping back to Nintendo versus Atari, I was wondering if you've seen any parallel there.
Yeah. I really can't speak to that.
Yeah, it's okay.
Yeah, the blue and the red.
Yeah,
Like
yeah.
we kind of use that term as we use it. Warm prospects.
Okay.
The warm prospects, they already know about the product.
Okay.
And then you can it's less of a not sell, because we don't really sell what we do. It's just they already know about it, so you can elaborate versus a cold a cold prospect that don't know anything about it.
Right.
And you have to kind of
Yeah.
provide them the information so they can
Yeah.
make that decision.
Good. Yeah. How do you market to somebody who's never
Right.
heard of this, reach
Right.
that market versus somebody
Right.
who's already heard of
Right.
it? Kind of good.
Yeah.
I like that reverse cold analogy. That's fantastic. Now jumping on once again, I'm a lay person here. I hear just word of mouth about diversifying your portfolio and all this stuff. I was wondering if you could speak on that once again, just very surface level.
Right.
Uh-huh.
Well, as far as diversifying your portfolio, if you put all of your eggs in one basket, for instance,
Yeah.
stock market, and if you don't diversify your portfolio, which I don't
Yeah.
I don't heavily invest in stocks. I have a little, but not
Yeah.
that's not my main concentration. But if you put all your eggs in one basket and that stock goes down, all your eggs are gone.
Yeah.
Your nest egg is gone.
Yep.
And you have nothing else, that's that to fall back on. So when you diversify your portfolio, you have some riskier items and some low riskier items.
Right.
Where if the riskier items fall, you have something.
Right.
But with stocks, low risk, high risk, if the market falls, it's all going to fall.
Yeah, you're right. Now, once again, as a layperson, I just hear, once again, word of mouth, all this stuff about passive streams of income. I was wondering if you could, once again, just very surface level
Right.
here, explain what that means.
Well, to me, it means
Yeah.
that means you own something where you do not work.
That
you know?
sounds nice.
Yeah, and the money is making money. It could
Yeah.
be money making money, or systems making money. For instance, McDonald's Corporation, they
Mhm.
have a lot of franchises and they have a lot of corporate stores.
Right.
But the CEO, the president, or the founders, or the owners, or the board of directors, the folks that have the most stock, that owns the most stock,
Yeah.
of that, they're not working in the stores.
Right.
So they have money coming in from selling franchises,
Yep.
or they're making money from the corporate-owned stores where
Yep.
they're leveraging other people to run those stores. They have a manager, they have
Yep.
assistant managers and workers to work those stores, work those processes, and that store is bringing in, turning a profit for the corporation. The corporation is not lifting a finger
Yeah.
to work those stores. So to me, that's passive income,
Yeah.
where you're not, you're making money and you're asleep. You're home asleep, or you're, vacationing, or wherever.
Yep.
It's doing it by itself on its own. But you have to set it up first.
Right.
Yeah.
Okay. Good. Once again, I want to switch here, kind of more personal levels, geared a little bit more towards you.
Mhm.
How would you personally define success?
Well, for me,
Yeah.
success for me is, the passive income,
Yep.
where I'm making income and I'm not working. I have control over what I do with my day-to-day life. If I don't want to go to work, I don't have to go to work.
Right.
But I'm still making an income
Mhm.
without that. I'm a decision maker. I'm an important decision maker, but I'm not the only decision maker
Right.
in my entities. I have someone else to do that. And it basically, the entity basically runs itself.
Okay.
And I can do whatever I want when I want.
Nice.
To me, that's success.
Yeah. Do you have any special formula or blueprint for becoming a successful entrepreneur? I know
Don't
it's-
reinvent the wheel.
Yep.
Follow the processes that other people have done. They have done it. I have
Yeah.
mentors that that I work with, and that I'm following their footsteps. So I'm not going to bang my head up against the wall to try to figure it out when people have already figured it out. So.
Speaking of that, would there be any books or references that you would recommend towards that?
Rich Dad Poor Dad is a
Okay.
good one. You
Yeah.
know, the quadrant,
Okay.
where you have the I and the B. So I would definitely recommend Rich Dad Poor Dad
Okay.
to start off.
Right.
So you can get an understanding of what passive income is, and what
Right.
what non-passive income is.
Okay. Thank you. That's actually, I think it's on my Amazon wish
Yeah.
list. I've been meaning
That's
to
a good.
get it.
That's a good book. That's a good start. A lot of
Yeah.
successful entrepreneurs have referenced back
Yep.
to Rich Dad Poor Dad, and and the quadrant makes a
Yeah.
lot of sense.
Okay. What's your favorite aspect of being an entrepreneur or a business owner?
I have control
Yes.
of what happens.
Yeah.
Good or bad.
Yep.
There's bad that come with it, but there's also good that comes with it. I'm the decision maker, and I'm in control.
That sounds,
That's-
that
yeah.
sounds nice. What has been some of your most satisfying moments within your current business, or even your past businesses?
Satisfying moments. Well, like for instance, when I had the IT service business,
Yeah.
I didn't really have to I didn't have to market at all. I didn't
Okay.
I didn't have to come up with a marketing strategy,
Yeah.
because the work that I performed it happened by word of mouth.
Right.
So I had one client. That client told another client, who told another client, and next thing you know, I'm swamped. I got too much business.
Yeah.
And I didn't have to hand out one business card or market to one. I didn't have to
Yeah.
pay any money to market.
That's nice.
So that, to me, that I was like, that's great.
Yes. Speaking of marketing, how do you market your current business, if you do market it, and if so,
Right.
what's successful about that marketing?
So right now,
Yeah.
my marketing efforts are all through social media.
Okay.
Facebook, Instagram, Twitter, YouTube. So those are the avenues that I'm using, and then I'm following. Again, I'm following in the footsteps of my mentors. They tell me exactly how to set it up, what to use, what to say,
Wow.
and how to talk to people.
Yeah.
So,
All right. Okay. I think that's actually the questions I have. I was wondering if there's anything else you'd like to add about your business, about you, anything we didn't cover that you think is important.
I think it. I think you hit pretty much. I mean, being an entrepreneur is.
Yeah.
It's something that you must really want to do.
Right.
And it's hard work.
Okay.
You're ultimate responsible. You're ultimate responsible for everything, the finance and the marketing, everything, the money. you're responsible for everything.
Yeah.
And if you're not in the mindset to handle those responsibilities, then it's probably not a good fit.
Right.
It's not for everyone.
Yeah.
People say, well, I can own my own business, but there's a lot of other things that come along with that. You got to pay taxes. If you have employees, you got to make sure you pay your employees. So sales, operations. It's it's a lot, but to me, it's worth the risk. The payoff is worth the risk.
Good. Well, thank you. That's I think all I have. Thank you so
Hopefully,
much.
Hopefully, it worked out for you.
I think it did. Thank you.
Great.
Yep. Thank you.